Hey guys, and welcome back to a new accumulation zone video. And in today's video I will be sharing my Bitcoin bear market strategy. So let's get right into it. So let's get started. First of all, I drew out the bear market bottom of 2018-2019 right here, sitting at roughly $3,229 here on a Binance chart weekly, and the bull market high here at $69,000. So this is basically the last range, the last bull market range we had. And if we also considered halving that we had during May the 20th, we see that after the halving, the bull market really started to kick off. If we draw a volume profile from our lowest point to our highest point, we see that we have the volume point of control right down here. That's where the big accumulation happened. That's where they just basically dumped on all the buyers, all the retail buyers who got into the market a little bit too late, in my opinion. Alright guys, now let's get straight to the point of how I'm managing this bear market. So we have our low, our bear market low of 2018 and our all-time high. We have our last halving right here in May 2020, after which the bull market really started to kick off. Our volume point of control, if we draw it out here with this trend line right here, volume point of control. Let's make this in a red color. This is basically where a lot of orders are stacked. So basically we can also draw a range from here all the way down to the bear market low. So this is going to be our worst case scenario if Bitcoin is dipping below $14,000. That's where very likely the big hedge funds and traders basically who position themselves right within this range, they're going to step into the market again and protect those areas, those levels. So now instead of, let's say for example, you have 100% of your capital available to play with. So let's say those 100% equals, for example, 10,000 USD that you want to invest into the crypto market. This number could really be anything based on those percentages here. So instead of using your 100% and entering into the market when, for example, your favorite crypto YouTuber or your favorite guy on crypto Twitter is telling you that the bottom is in, for example, lots of traders called the bottom in right here at the $20,000 level. They said, this is going to be the bottom. I'm in with $1 million trade. Follow my trades and you're going to be rich, basically. I don't like that approach, especially when it comes to navigating a bear market, which we are currently in, no doubt about it. We already dropped by, let's measure out the all-time high or to this low. Currently, we're down 76%. Usually, during a bear market, if history is any indication, bear markets usually drop prices down between 80 and 90%. So with a 87% drop, so that's only 10%, a drop of 10 more percent, we would get down to the volume point of control sitting at 8,605. I know all of you guys are worried that Bitcoin's gonna drop too low, but it's healthy. It's part of the market cycle basically. So instead of putting your 100%, your 10,000 US dollars in when your favorite crypto YouTuber is telling you to do so, what I am doing is I am splitting up those 10%. So let's say, for example, we split them up in quarters. So we have 25%, 25%, 25%, and 25% out of those 100%. And what I am doing, or what I'm suggesting to do is, now that we're already down here and maybe you haven't started accumulating yet, because that's really the best point to buy Bitcoin, when no one's talking about it, when you don't hear it in the news, when you don't read it. Let's continue with the strategy part. So instead of putting 100% at risk and getting into drawdown on your $10,000, maybe it drops by another 25%. Now you already lost 25% of your capital. Wouldn't be a smart way to do it. Maybe you, for example, fear that Bitcoin's dropping to zero and all your money is going to be gone. So you don't want to put yourself at the emotional risk of you closing the position or selling all your Bitcoins. So what I'm suggesting is, instead of risking 100% once, what I, for example, did, I risked 25% here, 25% here at 20k, and those lines, they are basically a Fibonacci pullback extension. So from the low of the bear market in 2018 all the way back up to the high during 2020, I started to DCA into it on important Fibonacci levels. So basically is what I created a little grid here, like a DCA bot would do, but I wanted to start accumulating below the 50% level. So I got a little bit late to the party, but still I managed to get my first big entry on Bitcoin here at a 0.7 Fibonacci level. My next entry was at the 0.75. And now you can trail it all the way down till here, and you might eventually gonna hit the bottom with one of your partial positions. So you, for example, could split it up in 6 or 8. Yeah, because I really like this approach of, instead of going in with all your capital at one specific level because your favorite YouTuber told you that this is going to be the bear market bottom. No one knows where the bear market bottom is really going to be, and especially not YouTubers. So I'm not telling you where the bottom is. I'm telling you a method to catch the bottom actually, but not with every position. So you're slowly scaling into your, if it's falling further, you're going to enter with some more money. You're going to enter and you continue the accumulation. That's why we call it the accumulation zone. You continue accumulating with prices falling down. And what's happening is that your average price, let's assume that this little red box, or let's make it in a different color, that this yellow box is your average price, your average entry. So for example, you would have entered right here for the first time. That's where your main position is. So with your next entry, with your next entry on the next Fibonacci level, right here at 19,700 something, you would have entered with another 25%. So your average position size would be somewhere right here in the middle. Now you're entering, it dropped even further, all the way down to 16,300, and you entered again with 25% of your position size. So now your average order or your average entry price would be sitting somewhere around the 0.75 level, and then it's dropping even further. So now your average position size, your average entry price, should be sitting somewhere within the 0.8 and 0.75 Fibonacci level from the bear market low from 2018-19 all the way up to the bull market high in 2021. Right here at $69,000. So you slowly, as far as price is going to continue to fall, you're slowly getting into the market, bringing down your average entry price. Of course, you're not gonna nail the perfect bottom with your average entry price, but you're way better off than, for example, risking all your $10,000 or your 100% of whatever money you're looking forward to invest into the crypto market at once, probably facing a 20, 30, 40% drawdown all the way back into this area here with the volume point of control. You're basically splitting those 100%. It could be 10% buys, it could be 5% buys, whatever you like to do. You could be buying weekly, you could be buying daily. It all depends on how you're trying to manage this bull market, or this bear market, sorry. So you're slowly but surely reducing your average entry position price, because what's happening until the next Bitcoin halving, which has roughly been estimated on the somewhere during March 2024. So what's going to happen within this period from here where we're currently sitting at to the Bitcoin halving could be looking very similar to this. We could get one more drop. We can continue sideways, rally a little bit to the upside, have one more little drop here. That was the March 2020 drop of COVID. This might not repeat, we will see. One more drop before we actually continue to rally like we did after the last Bitcoin halving. But what's happening in between and where the actual Bitcoin bottom is going to be sitting at, no one on YouTube or wherever, maybe if you have some good friends at big banks and who actually trade and manipulate Bitcoin, you'd be able to know, but certainly not from a crypto YouTube influencer. So in my opinion, that's the best way to manage Bitcoin during a bear market, to slowly but surely lower your average entry price, basically doing a dollar cost averaging approach. And what's happening within this phase until the Bitcoin halving in 2024, no one can predict it. But you can make sure that your average entry position is not fixed somewhere around this level. You're slowly but surely moving it further down, that on the way up, more and more of your entries are gonna be in profit. And by the time we're all the way back up to the all-time high, you're gonna be really happy. Alright guys, to sum up this video, all I'm really trying to say is that no one's gonna be able to predict the actual Bitcoin bottom. Of course, if you caught a Bitcoin bottom in already 4 or 5, 6 times, eventually one of them is gonna be right. But you shouldn't be really following this approach. You don't have as much capital to play with, like for example some big crypto influencers or YouTubers or people on Twitter. They have millions of dollars to spend with, so they call in the bottom here with a screenshot of a trade that's running with a few $1 million in profits. That doesn't mean that the Bitcoin bottom is actually in. That's just some lucky, more or less, influencer that's trying to, I don't know, gain a bit more views calling in the bottom, because no one really wants to hear the truth that Bitcoin could fall all the way back to 8 grand, 5 grand, 4 grand, even 3 grand. It's still on the cards. But you will not be able to predict what's going to happen until the Bitcoin halving. If history repeats, and if history is any indication, we can expect something very similar after the next Bitcoin halving in March 24. So yeah, that's the end of this video. I'd say the best way would be to start accumulating now. That's why we call it the accumulation zone. Split up your 100% of your capital you like to invest into the crypto market, and slowly but surely dollar cost average into this bear market to be ready for the next bull market. Alright guys, take care and start accumulating.